I'm going to go broader here, Gary. I have never seen a primal cry for an SEC commissioner to just do something. You mentioned something I mentioned an hour ago, which is FDR. I'll go to the Commonwealth speech early in the Depression. There is a primal scream, Chairman, to do something. What is the do something you want to do to help us with meme stocks, with SPACs and other things I don't understand?
Well, Tom, you're being a little immodest. I'm sure that you understand them a little better than that, and your listeners have listened to you for years. But look, what I think the important thing is investors want to know there's somebody looking after them. Working families, pensioners, people that have 401ks. So you mentioned special purpose acquisition companies, or so-called SPACs. It's really making sure that the sponsor who's behind that is fully disclosing their take on it. These are very expensive, dilutive products. I mean, the sponsors take out a chunk at the beginning, then there's more being taken out later when they merge with a private company in what's called a de-SPAC. I just call that a target IPO. And it's those disclosures ensuring that the retail investors get the right disclosures and are protected and somebody's not misleading them. And secondarily, that they're participating just like the institutional investors. And a lot of the big institutions buy into these SPACs later during that target IPO, and they do so at a preferred price rather than the price the retail public's getting.
Chairman Gensler, long ago and far away, we had a red herring. We all read them, differently ourselves. I start at the back and see the character and the integrity of the people involved. And as you just mentioned, you go up to that single page on dilution to see how bad the new shareholders are being taken. Do we know the dilution? Do we have transparency on SPACs, or frankly on other challenges you have? Do we have visibility on these key issues right now?
No, I've asked staff to think across our whole markets. Technology rapidly changes finance.
Fair.
And so there are rules sometimes put in place 50 years ago, for instance, on beneficial ownership. Congress said if you went past 5% and you had an intent to control a company, you had to disclose, but they gave you 10 days. And we've been given authority to shorten that. Well, technology says we can shorten that. Shouldn't the whole market know if somebody has tripped that 5% wire? So I've asked staff to think about these types of disclosure in stock buybacks, in something called derivatives, called securities-based swaps, and yes, in these special purpose acquisition companies as well, the dilution, the cost, and the like.